Let's assess price action and momentum and underlying strength in the markets with Gautam Shah. He's a market master of the day, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Thanks very much for your time. We had a global sort of guest with us in the morning who looks at Asia Pac, and I was made a comment, and he agreed that if you look at markets around the globe, right, some of the better performing markets, there are signs that momentum is flagging a little bit. Here in India, no real such sort of sense still. We are in a very strong up move, on the market, broader markets and on the Nifty as well. What is your sense, Gautam, and the phase that we are in, and what should we expect in the near to medium term?
Well, good morning, Prashant. I think as we always discuss, domestic liquidity is a revolution. And I think that's decoupled our markets to a lot of things around the world. It started off with decoupling with the Asian markets like China and Hong Kong, which we used to closely track, I think, a decade and a half back. Then it got us decoupled with the Indian rupee, and then pretty much with oil as well, with what has happened in the last 6 to 8 months. And now you had this weakness in the US markets, and despite that, our markets were stubbornly resilient. So I think we are in a good space. I think we remain absolutely solid on the charts. And I do believe how markets handled difficult situations and difficult events is an indication of internal strength. And I think the two major local events that we witnessed, the elections and the budget, and the global events in the form of the two geopolitical events that we saw, and the fact that the Fed delayed its rate cuts, I think all of these factors and how Indian markets handled it was a clear indication that we are still very, very strong on the charts. Had it been a decade back on the budget day, we would have lost about 10%. And I think that's what the domestic liquidity has really done, because it's really become a way of life for a lot of market participants. So a small change in tax, I don't think will have a very great impact on what markets participants do from a longer term perspective. So having said all of that, I think the trajectory is still up. We still see amazing rotation at the marketplace in terms of sectors and in terms of segments. And I do see further upside taking the market towards 25,500. I'm not so keen on where the markets head higher. I think support levels are very important. Until we are safe above support levels, which is the view, I think there is more to go. So pretty much the way the charts are right now, the best is yet to come, and we don't see any major signs of topping out.
Okay, no major signs of topping out. Bullish as always. It's good to see you that way, Gautam. And of course, this has been a market, right? I mean, the kitchen sink has been thrown in the market and it's still sort of emerged on top. But tell me, from here on, if you had to decide on sectors or stocks, right, where do you see any kind of value? I'm asking because it's very hard to find companies with sort of where there's any kind of valuation headroom. What are you looking at on the charts?
Yeah, I think value is a tough word to find in today's market. I think value has moved higher a few notches pretty much with what has happened in the last 6 to 8 months. But so be it. I think what you've seen in the last 2 months is the phenomenal comeback of FMCG and pharma and IT. I think these three sectors are considered defensives, and they have pretty much been the poster boys, of the recent past, and they continue to look rock solid on the charts. So we are actually banking on these three sectors, and I feel that these three sectors should continue to run up significantly, along with metals and chemicals, which I think are at the verge of the next phase of the bull rally. I would also want to add financial services as a basket. I know we keep looking at the bank Nifty, but if you look at the financial services index, which has banks, NBFCs, and insurance companies, I think that's one sector that can do significantly well over the next 1 year. So, these 5, 6, 7 sectors which I just highlighted are not the poster boys names. It's not the typical railway, defense, real estate, capital goods, where I think we have been recommending profit booking and switching to some of these sectors which are more defensive in nature.
Okay, all right. Hi, Gautam. Good morning. Good to see you in. Just give us the the level on the Nifty then. You've given us spoken a lot about sectors. By the end of this year, what are the charts indicating? Where are we headed?
See, I think the last bull market has taught me that you don't discuss too much about the magnitude because, this market can just continue to move higher or rather grind higher. And I still don't think we have seen a blowout in some sense. But in terms of a short-term number, I think 25,500 is a number that we have been working with, and I think we will get there gradually. In terms of a more longer-term number, I think 28,400 on the Nifty is possible. It's not going to happen in a straight line, but gradually we will get there with some corrections along the way. But in terms of support levels, which I think are more important, 24,600 and 24,100 are extremely important. Until the Nifty is above these numbers, I think the market is okay. And I do believe that the Bank Nifty from here will play a very key role. And if the Bank Nifty manages to sustain above levels of 50,000, there is still a very high probability of that index moving about 12 to 15% from here.
In terms of global markets, what are you noticing on the charts? I'm asking because, this has been such an uninterrupted bull market. Ever since COVID played out, we haven't seen any major sell-off, even across the globe, not even a 10% correction. Is that looming around somewhere?
Well, that's the beauty of it. I see a lot of people talking about references of history and references of the past. I don't think you can use anything in history in the last 30 years to say or discuss or to forecast what's happening right now. Having said that, 2003, 2007 bull market saw multiple 10, 12, 15% corrections. But the fact of the matter is 3-4% is the new 10%. And that's probably the reason in the last 1.5 years, you've had these 3-4-5% sweet corrections. They come, they scare you, they make the market healthy, and the markets are back on track. So I think this will continue. India continues to be the poster boy in the global basket. If you look at the top 40, 50 markets in the world, we are still one of the best performing markets. And that's probably the reason FIs cannot ignore India anymore. And that's why the large caps have made a comeback post the election results. And I think that's going to continue. So definitely there are risks in the mid caps and small caps. So you can't go out there and buy anything and everything in mid caps. But I think the top 100 is still looking quite lucrative on the charts.
Okay, all right. Let's talk about a couple of heavier names then. Reliance Industries as well as HDFC Bank. One has been a big outperformer. The other one has been lagging. Well, what are the charts indicating on both these two? Because you put it together, well, it's more than 20% of the index.
Yeah, I think a couple of months back at lower levels, we put out a very bold call on SDFC Bank. And we said that, it was available near the COVID highs. So it was a very clear buy when we looked at the ratio charts. And I do believe that SDFC Bank can do something special over the next 6 to 12 months. In fact, our working target is as high as 2,000. And if that were to happen, the Nifty and Bank Nifty will be up. In fact, if you look at the contribution of ITC or Dr. Reddy's or Bharti, I think many of these index heavyweights have shaped up really well. And I do see a big opportunity in SDFC Bank, even from these levels. On the other hand, in some sense, Reliance has been an underperformer. It's not a favored stock. It's not a path that I'm going. It might do well, but I don't think it's going to create serious alpha. I would still bet on an ITC, which we discussed in our last interaction. And I think there is more juice left there. But within the banks, I think SBI, ICICI, and HDFC, I think these three big banks could potentially lead the market higher from these levels.
Okay. One final question then on the auto stocks. Any thoughts there? Because, they're in the news right now. We have a big IPO coming up on Friday as well, the Ola IPO. Then the two-wheeler companies will once again be in focus. Anything on the charts there?
Not really, Sonia. I think the auto index is looking quite toppish at this point of time. It's just that the market momentum is so strong and therefore they are up. However, I would look at the auto ancillary companies. I think that's a space which I'm betting on for the next 3 years. And I think that's a big opportunity. But talking about opportunity, I think chemicals is one space which we are very seriously looking for the last 1 month. And I think a lot of these top quality chemical stocks could be the serious winners over the next 6 to 12 months. And we've actually recommended some at Goldilocks recently.
Gautam, the Bank of Japan decision is out. There is a finally, they've raised policy rate to 0.25%. I don't know after, I think how many years, but they finally effected a hike. I mean, it's Japan going one way, the world going the other, right? I mean, you've got the rest of the world waiting for rate cuts to start. I mean, the US and Europe, here in India, other emerging markets, but in Japan, I mean, there has been this wait that they will actually start to increase interest rates because inflation after 25, 30 years is finally So, it did finally cross that 2-3% kind of levels. Any thoughts at all, Gautam, if you track this stuff or you've been watching the USD JPY big moves lately?
Well, not closely enough, but I do believe that every country has its own dynamics, and I don't think it impacts Indian markets so much. And I think the Japanese market also went to lifetime highs after almost 25 years of staying in a grind. So in that sense, I think it's great for that country. But I think Indian markets will be looking at what the Fed does. And I think in the September-October meeting, pretty much the consensus is that the rate cuts are coming. And I think on account of that, you could have financial services trying to discount that. So that's probably the reason I keep saying that financial services could be a theme to watch for the next 3 to 6 months.
Okay.
And we don't have sort of exact figures, and it'll be interesting to get that. One of the ways why Japan is important is because so much of Japanese pension money, local money, retail money, has essentially gone out of Japan in other markets around the world looking for yield. And that is essentially what is sort of known as, one sort of representation of the carry trade. It typically is referred to foreigners buying in Japan and buying assets around higher yielding assets around the world. But it's also true that Japanese sort of money, local retail money in Japan is flooded across the world. And in India as well, I remember a city report, global city report saying that Japanese money is a big part of the foreign inflow which has been coming to India through various structures, etc. But that has been happening over a period of time. And I think the return differentials are still very, very high compared to, especially now with the sharp outperformance that India, etc., has seen. But we'll track this one, get you some reactions over the next couple of hours. I think first rate hike after some time, policy rate increase at 0.25%. The newspaper Nikkei had reported that a hike is coming, and it has really indeed come through.